Welcome back, YouTube. So, what we've talked about, what we've kind of gave the parameters for, is happening, and this is, in my opinion, this is great news. I think that we are getting the break that we've talked about in the last few videos, and are able to, if you wanted to, obviously accumulate more, you can, and we're able to kind of strengthen the levels that we're at now. So, and it's normal to have some overshooting and stuff, but we'll talk about that when we take a look at the charts here. I'm looking at coin market cap, and you'll see BTC is obviously number one. It's down I guess in the last 24 hours is the most significant drop. It's down 6.66%. Ethereum down 7.25%. Cardano down 11.60%, and Doge down 8.68%. Right now, Doge and Avalanche are back and forth because earlier, as in like an hour ago, Doge was number 10. So you can see right now it's 13,167, 13,148. So this is back and forth between Doge being number 9 and number 10 in the top 10 crypto. But overall, what we're seeing is we've seen a massed amount, like for example, 150 million liquidated from the crypto market in the past 45 minutes. We've seen roughly $1 billion leave the crypto market in about 24-hour period. So when we are looking at this, I want you to know that there is some panic selling probably from traders and stuff like that right now. But overall, when we talked about this last cycle, when you start seeing $300 million in BTC longs liquidated in the past 10 minutes and stuff like that, this is not retail moves here. And we also can't lose sight of what the plan is for next year. If we're talking about ETFs, whether or not that gets denied or delayed, for lack of better words, that these are short-term effects. If you are long in these cryptos, you have to ignore the short term and look at the macro events and in the long term, because you're going to see things like this. And meanwhile, while everyone, while the retail sector is panic selling, you have companies like mega tycoon $10 trillion companies like BlackRock and stuff who are going to be averaging in. If you think that BlackRock, who's getting ready to offer and is interested in offering a Bitcoin ETF, and you have these types of drops in prices, if you think they're not adding to their positions right now, you are crazy. So just kind of keep that in mind when you start seeing what's going on. Let's take a look here at the charts. I didn't want to spend too much time on this section. Let's switch screens and take a look here at the zones that we're talking about, strengthening the floors. This is obviously Doge here. We're down roughly to the 14-day, and these are the zones that I was talking about. So let's deal with this before we go to BTC and shorts and stuff like that. So where we close today is certainly going to be important, but as of right now, it's not a big deal. You can always have some overshooting here. It's kind of like you can run deep into the zone here and put a long wick to the top. You can do so to the bottom. It would be very, as far as for this run and building out this floor, it would certainly be great if we close above this zone, above the 950 mark. That'll certainly be great, but we do have some room here to close slightly out of the zone. But overall, it's not the end of the world. We've seen this here on this previous trend. We've seen it kind of get a little funky here, and then they continue the trend. Overall, the tone of the market has not adjusted yet or had a deep enough correction to say, okay, well, we're going to consolidate, or we're going to consolidate a little lower first. We don't have any evidence of that just yet. And if we did, obviously, I'll make a post about it. But right now, we are ideally, you're looking to close above the 950 mark and kind of build out this floor. This is what I was talking about in my last video. And in my opinion, I know you guys see a lot of videos and it's all moon to the moon and stuff like that. But for me, in the way I like to invest, when I'm looking at the longevity of a coin, I like to build strength along the way so that you are not, it's not going to take the volatility out, but it's going to make it it's more predictable, right? You'll kind of have an idea so that you're not just saying, okay, well, we could have a 10% fill to the downside today. So this is kind of what I like here. I'm looking to kind of build out this zone here before we ascend. Obviously, we're still on the upward trajectory. And again, if we do have a red day, that's perfectly fine. I was actually kind of expecting it. This is why I'm talking about this in my last video and using the running the marathon analogy is you run, you catch your breath, you run, you catch your breath, run, catch your breath. And that is ideal. And this is kind of what I'm looking for here. So even if we have a few more days here, because technically speaking, what we're looking at here with these trends is you'll have something where you have that run, and then you'll have a consolidation period of normally about a week. So you'll see this run up. You have about a week of sideways action. You have a run up. You have a week roughly about sideways. Because if you think about this, we came here, we had this run up, we had this descend, and then if you count all of these little candles in here, you're talking about like 5-6 days. And then we had the ascend here. So if we have that sideways action here, that's perfectly in line. This is why I'm saying that we don't have any evidence of a breakdown just yet. But in the case, and if we do, just remember we've done this before. Also in this cycle, we had this breakdown. I was like, oh my God, we're going back to 5. And it literally just grabbed liquidity. And that's really what it's searching for now. When you have a momentum, or if there's bad news that comes out or something like that, or if there's a bunch of liquidations and panic selling and stuff like that, the question you have to ask yourself is, where is the liquidity, right? That's ultimately where your floor is going to be. So if you're looking through this, you say, okay, where is the liquidity? And the question is, where are people comfortable buying with this price here? Do they think this is a steep enough discount to enter the market, right? And this is why I want to ideally if we build out this floor here, this can be a liquidity zone. That's technically what you're trying to not time, but just kind of get an idea of where it's at, so you're not stabbing in the dark. Let's take a look here at shorts before we run over to BTC. Shorts are down, obviously. Yeah, they're liquidating their positions as well. When you get the tick down, you get out. Shorts are down for a day, nothing significant. Let's check BTC shorts. Ooh. If I can spell, what's going on here? Is it BTC USD shorts? Yeah, there we go. Let's see. Yeah, down as well, doing the same thing, which is if you're going to short or take puts, that is certainly the best way to play. Otherwise, you waiting for a rally, you're just waiting to get wrecked. So they're getting out, which is to be expected. BTC filling the gaps down to the 14-day moving average. This is what I meant by this is not ideal when you start having these run-ups because you can fill these very quickly. So for those of you who are new to the channel, you haven't had a chance to witness a gap fill, that you're looking at one right here. These are these gap fills here. We have these big, long green candles, and it's a very weak floor in there, and there's not many people are going to enter the market because it just blew past some numbers relatively quickly. You're going to blow past them just as quickly on the way down. So worst case, if we're not able to grab some liquidity here, well, let me finish this statement. If we're not able to grab some liquidity, you're looking at a retracement probably back down to around these levels, around 37, 36. But on this trend, BTC has used the 14-day as kind of like a trampoline, basically, or a floor. We've hit that. We've had some slight overshoots, but BTC has used the 14-day to kind of catch its break. When it's falling or it needs to kind of take a rest from the run, it uses the 14-day and is able to do so, and has done so successfully since early November. So since the 14-day rose to meet it. So from the time the 14-day actually caught up with the price action, it's used it. So so far on this cycle, again, we'd have to see something significant break below it in order to kind of get an idea. But as of right now, this is really we're in really good position here. And this is kind of what I was saying. For me, the reason I put the title is I love it is because these are price actions that you're looking for. I don't like to buy on things like this. This is what I like. If I'm averaging in, I like this. I like these red candles here. I'll buy the green sticks. So let's take a look here at Ethereum. Let's kind of get an idea of the tone of the market. Ethereum, huge to the downside here. Let's see, breaking. Well, it was much lower actually. It's fighting back, so we'll see where these candles close. And keep in mind, these are open candles. So what we're looking at now, it may look different tonight. It's not necessarily where it's going to close at. This is just the live price action that you're looking at now. So that's not indicative on what's going to, or where these are going to actually end up, because it could end up a much smaller red candle. You know, it could still close down, but it doesn't have to be this, I guess, dramatic. So let's see. Could feel something probably down to like around the 2000 mark, but again, I doubt it. We can certainly see that breakdown on like Bitcoin 36. Doge. I don't know if I didn't give a low for Doge. Sorry, I'm jumping all over the place. I'm gonna go back. We had some red around here, some sideways. Well, that's close to have two tests here, but that'll put us like around the mid 8, which is almost a full penny. But same thing with Bitcoin. It's used the 14-day. We had some overshoot here, but it's used the 14-day pretty much since it rose to meet it. So we can kind of, it's kind of, I guess, lean toward that to kind of see if it's going to break below it a lot before we say, okay, well, that trend is broken, but it's used the 14-day. And again, this candle has not closed. So we can't necessarily use this and say, oh, this is the new direction of the trend breaking. So we'll have to reevaluate that as we get closer to that candle closing out. But yeah, you can mostly say, because this will kind of retest here, because you have two tests here and a third. So you guess you can kind of call it here. It's a weak floor, around like, I say 850 to 875. But we'll see if this breaks to below the 14 as well. I think that what we'll ultimately see, if it's the trend is actually continue, because the 14-day is kind of like the exhaustion. Technically speaking, if we have the sideways action here, the 14-day ideally will curve and kind of flatten out, and then we'll see some sideways action here. That would technically be a continuing of the trend that we're seeing right now. But we'll see how that plays out going forward. I'm loving this price action. I love the red days here. When I talk about no fluff on the channel, that is what I mean. I do serious investing, and the red days are the days that you are, well, for me, again, not financial advice. Those are the days you're looking to consider averaging in or adding to your positions if you don't think you're going to get a better price. And ultimately, that's what I meant by where's the liquidity, because that's what's going to happen. That's what investors with serious money are asking themselves. That's what these funds are asking themselves. That's what BlackRock is asking itself. Is this the best price? Are we going to be able to get this down lower, right? Are we going to be able to, if we cause a 6% drop, will that cause enough panic for retail to sell an additional 4%, right? And then are we going to be able to buy in at 10%, right? So, because you'll have, retail, for the most part, even if you're thinking about stocks and stuff like that, if you're looking at $1 trillion assets, retail is not moving the market, right? You putting your $10,000, $5,000 trade in there is not going to move $1 trillion asset. It's like these are hundreds of millions of dollars being shifted around very quickly. It's causing this volatility. So just kind of keep in mind who's behind these candlesticks, right? You're going to have the direction change, and then you can have retail panic and contribute to that, or continue a direction that the asset is already going. That's kind of how they capitalize. Like the example I used earlier is, okay, if we drop it 6%, can retail panic enough to sell an additional, 2-4% or whatever, so we can capitalize off of that. That does happen. But as far as for collectively, it's very rare that you're going to see retail tank a coin or even pump one up. Like especially something with $1 trillion. If it's a cheaper coin, obviously it can happen, but especially something with a cheaper, with a market cap as high as Bitcoin. So you know who's pushing that coin price around. Let's see, is there anything else I wanted to cover? No, I will save the rest for my next video, and we'll see how this kind of closes out. I will get back to you if we get a break, or if we bounce off of the 14 I'll report back. But as of right now, we'll just kind of wait to see where these candles close out before we start, because we don't want to speculate, right? Because I could go on a rant about what happens and trending sideways and stuff like that, but we don't know. So let's just wait on those candles to kind of close out. So with that being said, I appreciate you guys for tuning in to the price action update, the FUD, all this, because you're going to hear about possible delays for the ETF and stuff like that. The government's going to print money again, I promise you. And we are going to see a higher allocation of funds and stuff like that into the market, right? So the timing of it can be off, certainly, but these two things are going to happen. So the question is, what is your position going to be, and are you patient, right? So with that being said, we'll get into that. I have some very special videos coming up that I believe are going to be very informative, that a lot of you are going to find great value from. So just kind of tune in from those. Subscribe to the channel if you have not. I appreciate all of my new subscribers. Can please continue sharing the video, liking it. It certainly helps YouTube push the video out. I appreciate all of you, and I will see you guys in the next video.